What is going on, investors? Hopefully guys are doing well out there. That's right. It is Friday, and it is also time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. I think I'm still wearing the same shirt I wore last night when I recorded the Intel video. Frugal lifestyle over here at the Investor Channel. Better not waste any more of your time. Kick things off like we always do with Meta Platforms. We are on earnings eve, guys. It should be a very exciting week next week, particularly on February 1st. I hate it when these companies do that. They really should be thinking about the Investor Channel when they schedule their earnings date, as we have Meta, Apple, and Amazon all reporting on February 1st. A very excited day, and I'm clearing my schedule so I can bring you all of those earnings videos that same day. Meta Platforms start of the week at 386.83. This stock just continuing to melt higher, up 1.9% to finish the week at 394.11. And the company just topped that $1 trillion market cap, and we'll see if they're going to be able to meet those expectations next week. We saw this week we'll talk about it. We'll talk about Netflix and Tesla. One met expectations and one did not. So we'll see where that stands for Meta next week. Now, Meta is going to offer European Union users, Facebook and Instagram users, more control as it complies with it. Apparently, there's this new Digital Markets Act, which is being shortened to DMA. And European countries really leading the way here. I don't know if it's just the society over there cares more about privacy or cares more about passing these types of laws than it is here in the United States. I don't know if it's just easier to pass these laws than it would be to pass something like this in the United States. I could see something like this getting passed here in the United States, but boy, they'd go back and forth for a year or two. But they continue to pass these privacy laws. It's going to give users a choice if you want, essentially give Meta access to more data and be able to share that between Instagram, WhatsApp, and Facebook. And look, I actually like these types of things, honestly. It makes it harder to advertise. It certainly makes it harder for Meta, but in the end, I think choice is good for consumers. Now, Meta may see a sales boost as one way to counteract all the privacy and all the regulation out there is just ad load ramp. Just ramp up those ads and make those kids that are flipping through their feed 24 hours a day see as many ads as possible. I'm not on Instagram enough to know if the ads are, in fact, I don't think I've seen maybe an ad yet when I'm on Instagram outside of the normal feed, but again, maybe I'm not on it enough. Now, very interesting development here in the United States. You've got Florida passing, this is a House bill, to ban minors from social media. This is a tricky law because what constitutes a sign up to a social media site, also what constitutes a social media site. Is YouTube a social media site? There's certainly a lot of videos that I wouldn't mind my kids watching on YouTube, certainly instructional videos, but there's other videos on YouTube that maybe they shouldn't be watching. Same thing probably applies to almost all social media sites. There are certainly some posts and some content that maybe is useful to consume, and obviously there is a lot that isn't. We'll see how these goes. I heard there are actually more states looking to pass this type of bill. Certainly if you have an age restriction on social media, could tamp down at least the user numbers. Probably not the advertising numbers, in my opinion. Moving on to Apple, start of the week at 194.26. As Apple heading into their earnings also on February 1st, company was down about 1% this week, finished the week at 192.37. Apple Vision Pro, those amazing looking ski goggles. I mean, I'm kind of warming up to how these look. I think it's a question though on what's the use case. We talked about how last week, I think it was Netflix and YouTube, not going to have a native mobile app, at least on launch date for the Vision Pro. They're going to force you to go to the web. My guess is that's for probably data collection purposes, also maybe advertising perspective as well. My guess is the read on this is accurate, that initially you're going to have maybe several 100,000 people order this at about $4,000 each. Those are going to be your super hardcore kind of cutting edge type consumer that want to have the latest and greatest technology, whether it's from Apple or anybody else. But after that, I think the demand for these will quickly taper off, and Apple's going to have to come out with a cheaper version, potentially one that looks almost the same, but maybe remove the computer chips, maybe even remove some of the high performance cameras and just make it cheaper. that to me might make it more mass market. Now, Apple is scaling back. This is a rumor. Its car project, while other companies, including Google's Waymo and others, continue to power up. I am just not convinced Apple is going to execute on a car. I'm not convinced that they're even working on one, even though we see a lot of rumors there. And certainly when you look at Apple's R&D budget, they're spending billions of dollars on something. And I still can't figure out exactly what it is at this point. Now, Apple announces the biggest shakeup to the iOS and App Store since launch. And this is not a big shakeup. This is not a good shakeup, as you will, for Apple, as they're going to allow app makers to accept payments and direct users off of apps. So instead of processing your payment directly through the app, more than likely what you're going to see as an option, you're going to say pay right now with like Apple Pay or whatever, and it's going to be $30, or click this button and we're going to give it to you for 20. And so you're going to see a lot more choice. And again, I think this is probably a good thing, but for Apple, probably going to skim probably several $billion off the top and maybe potentially the bottom line of this company over time. Now, company's Q4 shipments of their popular iPhone device, that dipped in China, but despite the dippage, iPhone's still 2023's top phone seller in China. Moving on to Amazon. Start of the week at $155.44. This stock melting up pre-earnings, up 2.35%. Finished the week at $159 and some change. Again, Amazon reports their earnings the same day as Meta and Apple on February 1st. Now, Amazon's Ring, company that they acquired several years ago, now they're going to block police access to your doorbell videos. Previously, if the police requested the doorbell videos in terms of maybe they might have had some kind of subpoena, Ring doorbell didn't even have to notify you until maybe up to 6 months later that the police actually looked at your videos. Now it appears, for the sake of privacy, maybe for the better too, that police aren't going to have unfettered access to your Ring doorbell videos. Now, Amazon Prime Video is getting ads. Probably one of the more important headlines of the week, estimated to worth maybe billions of dollars, at least on the top line. I can imagine too, these advertising, yes, you're going to have a sales staff underneath that, but Amazon's already got a big sales or big ad business. And so I got to imagine there's estimates saying this is 1.3 billion, maybe as much as 2.3 billion by 2025. I think also what we're seeing is a shift from advertisers. So they're used to advertising on linear TV, the NBCs, the ABCs, just your traditional cable networks as well. Well, there just continues to be a shift to pull those dollars from those networks and focus it now on Netflix that has an ad tier. Other companies have ad tiers, and now some of that money will fly into Amazon. Also, what is beneficial for Amazon is they're, just like they do on the football games, they're going to be able to advertise their own products and their own services against the Prime Video ads. So if they have a sale that they want to run, they want to advertise Prime Day, they want to advertise a new subscription service, Amazon Fresh or Whole Foods or whatever it is, they're going to now be able to run those ads more often on Prime Video. Moving on to Netflix for the week at $485.58, and boom, up 17.5%. Finished the week at $570. This is after the company announced their Q4 earnings. This was a couple of days ago on the 23rd. Check the channel for a full review. We're not going to recap the full earnings of Netflix or Tesla. Check the video feed for all of that. I think we did a good job covering both companies, Netflix in particular. Tell you what, we re-accelerated to double-digit growth on that revenue side. The user, everything looked good over at Netflix. They're just really executing quite nicely in a difficult market. You look at Disney Plus, Paramount, Time Warner, all the other streamers out there, even Apple is looking to partner with others. They're not doing well. And the fact that Netflix is incredible. Just shows you the quality management, and a quality product mixed with quality management obviously leads to investor success. Now, they called this a stunner. I think they're referencing Stone Cold Steve Austin, whose finishing move, I believe, is called the Stunner. But Netflix is grabbing WWE Raw rights, which is a popular, or I think it's the flagship show as it relates to WWE. It airs live on Mondays, and it's usually held at a stadium. They're also going to get exclusive live streaming rights to what used to be the pay-per-views at WWE, things like WrestleMania, SummerSlam, and Royal Rumble. They'll also get access to a large library of historic content for the WWE. Also, I heard an interview with somebody that's from the WWE. What they're hoping Netflix does is actually build a lot of their own proprietary content. So what's going to be interesting about Netflix is they're going to be able to take The Rock, or they're going to take Hulk Hogan, or one of these WWE wrestlers, and they're going to be able to create a series just around them, or create a documentary just about them. And so that is really interesting. I also think Netflix probably did, look, when you do a deal like this and you're a high priced and a high value net worth publicly traded stock, what you're going to do is a lot of research. My guess is Netflix did a lot of research and they found a lot of WWE fans probably weren't subscribers to Netflix. And so this is a great way for a customer acquisition tool. Somebody that is a huge fan of WWE doesn't happen to be a fan or a subscriber to Netflix. Now they have to subscribe in order to see the pay-per-views and the Monday Night Raw. I think Netflix bagged a winner here. And when they look back, the $5 billion price tag for 10 years, probably going to look cheap, especially compared to other major sports. Moving on to NVIDIA. Started the week at 600. What else is new? Stock up again, up 1.8% to finish the week at $610. NVIDIA reports their earnings about a month from now, on February 21st. The big news week for the semiconductor industry, but NVIDIA and Equinix, which is a data center, I guess you could call this like a data center REIT. They have a dividend and they basically manage and build data centers. It's actually a pretty interesting company. Well, NVIDIA and them are partnering to manage private cloud-based AI supercomputers. So NVIDIA is essentially supplying Equinix with obviously the proprietary chips that NVIDIA makes and the ones that are in super high demand. EQIX is going to, essentially put those in their servers inside their data centers, if you will. And then companies, particularly in the healthcare space, the insurance place, where you need private clouds, so you can't go on the public cloud where there's like a lot of security risks. I mean, there's security risk on the private cloud either. Don't think that that's not a thing, but where you need more security and where you want the data to be private, that is largely around healthcare and other sensitive issues. Now, moving over to the semiconductor industry with ASML, in fact, the premier maker of the lithography machines that make the high-end chips that NVIDIA, AMD, and others sell. The company announced their earnings this week, and orders more than tripled. It looks like things are on fire over at ASML, and if you look at the stock performance just over the last 5 days, ASML, which is a nearly $350 billion company, shares of that company up over 12%. So clearly, the semiconductor industry is on fire. We're not breaking any news there. Now, NVIDIA's CEO is working with Taiwan Semi to address AI supply chain constraints. TSM doing everything they possibly can to open up more lines, open up more facilities, open up as much capacity as they possibly can to meet the demand. Now, speaking of demand or lack thereof, Intel reported their earnings yesterday, and I was absolutely disgusted. I think people, when I do a video on Intel, they think I'm acting. They think I'm just doing it maybe for the laughs or the views or whatever. No, I was legitimately, when I read through Intel's conference call and their financials, I was offended. They talked about AI so much on their conference call. This company doesn't have an AI product to save its life. They talked about TAM, total addressable market, TAM. I can't tell you how many times the stupid CEO over at Intel talked about TAM and how our total addressable market. Dude, you have a total addressable market right there in front of you. Look at what ASML is doing over the past week. Its orders tripled. Look at what NVIDIA has done over the last year. The market is there right in front of you. Stop lying to us and start producing. That's what I have to challenge Intel's management and their investors out there, you gotta stop talking about the future and you gotta start delivering. And this company, the future doesn't look great considering their guidance was absolutely terrible. And I'm not convinced this company is going to deliver for shareholders on the foundry design model. That is an antiquated model. There's a reason why AMD, NVIDIA, all of them have gone kind of their separate ways from design versus manufacturing. I don't think Intel is capable of actually doing either. And the fact that they're trying to do both is a joke. And the fact that this company still has nearly a $200 billion valuation is also a joke. Moving on to Alphabet, otherwise known as Google, started the week at 147. This stock popping. Look at that, up 3%. Finished the week at 152. I want to see this from a technical perspective. Google reports their earnings also next week. They give us a preview to the mega day, which is February 1st. Google reporting their earnings January 30th. Not a lot of other news out of Google. Also reporting their earnings on January 30th will be Microsoft, which started the week at $398.45, up 1.3%. Finished the week close to $404 per share. Microsoft striking that $3 trillion. Yeah, that's with a T market cap, as finally investors have realized Microsoft is going to take 40, in some cases, 50-year-old software, layer on some AI that they didn't even have to develop. They basically paid $10 billion for an exclusive arrangement with OpenAI. They're going to layer that on top of 50-year-old software and charge enterprise clients $30 a month. Now, there's a lot of people out there that are complaining about that and complaining about Microsoft. Guys, it's not about how cool the tech is. It's not really how good the AI is. It's, can you extract the money? And Microsoft, as we'll see next week on January 30th, they're going to be just in their early stages of remonetizing 50-year-old software. I think it's absolutely brilliant. Now, do I think it's the end all and be all as it relates to AI? Absolutely not. It's the starting point, but a company like this is going to capture a lot of dollars. Now, unfortunately, as you cross a $3 trillion market cap, somehow, in some way, you need to lay off 1,900 Activision Blizzard and Xbox employees, as the companies combined probably found some synergies, realized they probably didn't need everybody at both combined companies. Hope those people can find some footing and find other jobs within the industry. Microsoft Bing and Edge ads said to escape the wrath of Europe's digital marketing app, or the DMA. Also avoiding scrutiny there is Apple's iMessages. For the most part, they found that not enough business users use the advertising networks over at Apple and Microsoft. I don't know if that's a good thing. If you skirt around laws because nobody uses your products, I will say I buy a lot of ads on Microsoft Bings, and I find it to be very effective advertising, to be honest with you. Moving on to Tesla, start of the week at $212.81, and the fanboys might want to fast forward this segment because Tesla down nearly 14%. Finished the week at $183.25. The company was a massive disappointment, growing at just 3.5% year over year. When you've got a forward multiple in the 50s, and that multiple is probably under question. It's not like NVIDIA, which could shrink the gap on its multiple by producing more revenues and more profits as the year goes on. I don't think anybody believes that Tesla later this year is going to magically find revenue, magically find profit. Now, it is possible interest rates come down rapidly. That'll reduce the price to buy the car. But if the Federal Reserve reduces interest rates, in some cases, it could signal a weaker economy. So even if Teslas could be bought again with an auto loan at 1, 2, 3, 4, 5%, if the economy is weak, people are just simply not going to have the money to buy 40, 50, 70, 80, $100,000 electric vehicles. Overall, though, Tesla very much disappointed as it relates to 2024. It's going to be a sideways year in terms of demand, in terms of production. Nothing really exciting on the horizon for Tesla, to be honest with you, as it relates to product releases, any kind of gigafactory opening up, or any new kind of technology in 2024. So the company is going to have to drum up its own hype and its own demand. If you are bullish Tesla, I would say, like in the long term, I'm talking like 10 years from now, if you believe what Elon Musk says, Elon Musk is constantly saying that he thinks Tesla is going to be the most valuable company in the world. I can certainly see that in some scenarios, in some circumstances. And if you believe that, this year is probably a great accumulation year as it relates to Tesla. Now, Tesla is expected to launch a new mass market EV by 2025. I don't believe that, as the company has constantly missed target dates for its electric vehicles. And I honestly don't think a mass market EV would even sell very well right now. You do have EVs that are actually pretty darn cheap. Honestly, the Model 3 at Tesla, new or used, is not really that expensive. Go onto the Tesla website and see what it costs to either buy or lease a Model 3 after the tax incentives, and probably factor in you're going to save maybe $100 or $200 a month on your gas bill, or look to what a used one costs. A 2020, 2021, 2022 Tesla with a couple of miles on it, I think Hertz was selling them for like $16,000 or $17,000. If you can't afford a $16,000 or $17,000 or $25,000, $30,000 car, I'm sorry. I said this a while back on a video, and a lot of you guys needed a couple of tissues to dry the tears from your eye. If you can't afford a $25,000, $30,000 vehicle, you should stop looking to buy a car and you should go build up your skills. I can understand if you're 18, 19, 21 years old, but if you're in your 30s and 40s and you can't afford a $30,000 car at this point, it means your skills are lacking. Moving over to the technical segment of the show, now that I've offended like half the audience, the S&P 500 is not offensive. It is, I mean, look at that. It is straight up in the air. We broke to new highs. We're continuing to drift higher. You're expecting pullbacks in the S&P 500. Pullbacks in the S&P 500 should be purchased. Meta finally hit the all-time highs that you made back in September of 2021. Earnings are going to play a big factor in what direction, obviously, Meta goes in. That'll be on February 1st. Solid earnings will blast you higher, probably up into the 420s, 430s. Wait for pullbacks. I wouldn't chase it at that point. You should get a retest to the 395 area. Opposite happens. Meta just kind of blunders on their call, whatever it might happen, or just in general, the market's not having what they're selling. Pullbacks in Meta should be bought all the way down to about the 315 level. Conservative investors should set stops probably underneath these lows here at about 275. So you can buy this one at 313, have like a $40 stop to probably make like 100 in the short term. Moving over to Apple, it's just consolidating. Apple is really, since June, has consolidated, we'll call it 160 up to 200. You kind of been in a $40 trading range with Apple. I don't think anything that they have on their conference call is going to blow the doors off things, but at the same token, I don't think they're going to say anything that'll completely crap the stock out. If you do have that, you have buying opportunities with Apple south of about 160. Amazon just continues to walk up a beautiful trend that is still intact, dating all the way back actually to last year, January of 2023. We've been just channeling higher. Key thing for Amazon is to get through this large consolidation period that happened during COVID from about 145, we'll call up to 175. We're basically halfway through it. Solid earnings over at Amazon, and really the street doesn't expect a lot of profit out of Amazon. And just the things I've been seeing, this company is doing a better job at profits. They can drive those profits. You've got upside with Amazon retesting these highs all the way up here at 190. So you still got another $40 to go on Amazon. Really, before I'd even think about selling it, pullbacks, like basically all these stocks, should be continued to be purchased. Netflix breaking out, looking beautiful. Looks like we're going to be hunting down the all-time highs with Netflix all the way up here at $700. Won't happen maybe in the short term, but that's the direction that one looks like it wants to go. Speaking of going higher, and NVIDIA, what can we say? Stock is broken out. This also shows you what happens when you have a breakout. Like NVIDIA was in a trading range, broke out. I suppose like Apple could do this as well. It's kind of in this trading range, could break out. Meta did that as well. Trading range, broke out. Could see that like a continuation of that. Same thing with Netflix. Trading range, breakout, you run. Same thing with NVIDIA. Trading range, breakout, run. You wait for the back test to NVIDIA. Your first spot is $500. That's where you pull the trigger on a back test. Speaking of breaking out, I said I wanted to look at this from a technical perspective. Yeah, we're retesting the highs over at Google. Wouldn't surprise me. Semi-decent report. You get, again, a breakout on Google, the breakout followed by the back test. First area where you buy that one. Moving over to Microsoft. This one is just on a very, very, very steep uptrend. Very similar to Amazon, but has actually broken off of the new highs. Pullbacks in Microsoft, I mean, really should be bought until further notice. Tesla, talked about, this one's in the most unique. I mean, it has probably the most unique business model. It's the most different business model out of all these stocks. You'd even argue that it's not really a tech stock, more of a manufacturing company. But you have been more lately in this really ugly trend, lower highs, lower lows. And those of you that have watched the channel, you don't buy stocks that are making this formation. You don't buy them. It's not about picking a top or bottom or trying to time things. The stock is in a downtrend. You let it reverse before you step in. Intermediate trend, though, still looks okay. You have a low here, higher low, potentially higher low if you make a move higher. It's confirmed also by higher highs, although this is a pretty extended downtrend. More intermediate term, you're basically sideways, and the longer term trend with Tesla is more or less a hockey stick. I think you stay away from Tesla. I don't know the catalyst that pushed this one's higher. You start pushing down here into south of 175. I think that's your opportunity for Tesla. But again, you've got to have a real forward vision and maybe put up with a year or two of underperformance as it relates to QQQ, maybe certainly the semiconductor industry, maybe even online advertising business, AI, as it relates to Google, Microsoft, Meta. If you're willing to put up with that, and then maybe on the other side, Tesla figures out with the robots, the batteries, AI, full self-driving, robo-taxis, cheaper car, all those types of things, that starts materializing in 2025, well then, yeah, you're going to blast to new highs up at here at 450. So you go from 175 to 450, risk reward with Tesla, potentially the highest out of this group. Hopefully, guys, enjoyed today's show. Enjoy the football if you're a fan of that. Got some great games this weekend. And until next time and next Friday, good luck with your investments.